Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are trying to hide in their financial reports. Specifically today, AT&T is trying to impress us with Q3 results, and I'm here to tell you if they actually did. So AT&T Inc. just dropped its quarterly report for the period ending the 30th of September 2025. And we have to break it down for you. We are talking millions and billions here, so let's dive into the numbers. Don't forget to subscribe for more straight talk on company finances and join our Discord community for real-time analysis. First up, let's look at the top-line total operating revenues for the third quarter of 2025. AT&T brought in $30.7 billion. That is a modest 1.6% increase compared to the same period last year when they were at $30.2 billion. Now for the 9-month period, it is a bit better, a 2.4% increase, bringing in $92.1 billion versus $90 billion in 2024. This growth is mainly fueled by their mobility and consumer wireline businesses. The mobility segment is the star of the show. Service revenues are up 2.3% for the quarter and a strong 3.3% for the 9 months. Equipment sales also jumped 6.1% for the quarter and a very healthy 10.4% for the 9 months. This means more people are buying phones and using their services. They now have over 118 million total mobility subscribers, a 2.5% increase year over year. Even though postpaid churn is slightly up, their overall subscriber growth is solid. Business wireline, however, is facing some headwinds. Total revenues are down 7.8% for the quarter and 8.7% for the 9 months. This is mainly due to a significant drop in legacy and other transitional services revenues. People are moving away from older technologies, and they are not signing up enough for new fiber and advanced connectivity services to offset that loss. Consumer wireline is showing some real promise though. Broadband revenues are up a solid 8.2% for the quarter and 9.4% for the 9 months. Fiber broadband connections are really growing up 12.2% for the quarter. This shows that their investment in fiber networks is paying off. Now let's look at the Latin America segment. Operating revenues increased 7.1% for the third quarter, reaching $1.1 billion. But for the 9-month period, it is actually down 2.1%. This is largely due to unfavorable foreign exchange impacts impacting their results for a good chunk of the year. They saw growth in postpaid subscribers in Mexico, which is a good sign. Let's talk about profit operating income. This is where things get really interesting. Consolidated operating income shot up 33.9% for the 9-month period to $18.3 billion. And for the third quarter, it more than doubled to $6.1 billion. This massive jump comes from a couple of big factors. First, look at operating expenses. They decreased significantly by 12.5% for the quarter and 3.3% for the 9 months. A huge reason for this is that in 2024, they had a non-cash goodwill impairment charge of $4.4 billion. This year, they did not have that same big hit. They also benefited from lower restructuring costs and ongoing transformation efforts to cut expenses. And then there is other income. It increased dramatically in the third quarter, and for the 9 months of 2025, this is largely due to a gain of about $5.5 billion from the sale of their interest in Direct Fee Incorporated, a good chunk of money from selling off a part of the business. All of this translated into net income attributable to AT&T of $9.3 billion for the third quarter. That is far cry from the net loss of $174 million in the same quarter last year. And for the 9-month period, net income is up significantly to $18.1 billion. Looking at cash flow, operating activities were strong, bringing in $28.9 billion for the 9 months of 2025. This is up from $26.8 billion in 2024. They are also managing their supplier payments very smartly by aiming for 90-day terms and even extending some with direct supplier financing. Investing activities used up $14.4 billion during the 9 months. This is mostly for capital expenditures on networks like fiber and for spectrum acquisitions, which is crucial for their 5G expansion. They also announced some pretty big deals. They agreed to buy FCC licenses from EchoStar Corporation for about $23 billion to expand their 5G network. And they are also acquiring Lumen's mass markets fiber business for $5.75 billion. These are massive growth plays. Financing activities showed positive cash flow of $2.3 billion for the 9 months of 2025. This came from issuing new debt and preferred interests, but it was offset by significant dividend payments to shareholders and stock repurchases. They repurchased about 52.6 million shares in the third quarter alone, showing a commitment to returning value to shareholders. Overall, AT&T is showing a much healthier financial picture compared to last year. The sale of Direct Incorporated and strong performance in their mobility and consumer wireline segments are major drivers. Their planned investments in fiber and 5G spectrum signal a clear strategy for future growth. However, the business wireline segment needs attention as demand for legacy services decline. The company's debt levels remain substantial, but their strong cash flow and management of expenses are positive signs. It looks like AT&T is actively reshaping its business for the future, and so far the strategy appears to be working. Alright, that is our breakdown of AT&T's latest filing. What do you think about their performance and future plans? Let us know in the comments below. If you found this analysis helpful, give this video a like and subscribe for more deep dives into corporate finances. And don't forget to check out our Discord community linked in the description for more real-time insights. Thanks for watching.